Rohr here with an early concise highlight on Thursday, January 22nd, 2015. It is currently 6 a.m. U.S. Central Time. Coming to you a bit early today so we can have this up for your review well ahead of the ECB press conference at 7:30 this morning, U.S. Central Time. It's likely to be as major an influence as the other central bank influences so far this week. We'll get back to that momentarily. So, what does all this mean to the markets? Well, it means generally the markets liked it. The equity markets liked it, and the increasing QE and easing didn't really help the govies that much. We've got the hourly S&P on the left, 30-minute on the right as usual. We were saying coming out of the failure on the gap higher last week, Tuesday morning, as the market came under pressure over global concerns in Europe, that as long as the U.S. S&P 500 generally held the 1985 to 78 range, that the old 85 high from last July, with some tolerance, was going to be just fine. And lo and behold, where were our lows here? 83 and another low around 82. And of course, since then, the market's pushed up, actually left an up break back on Friday from the 2002 area. And you can see how even on the nervousness going back to yesterday morning, the market barely got near it and got the bid back, and ultimately is trying to push above 2025. And in fact, this morning is up 4 right now at 2031. But it's traded up to a high of 2035 or so. So this market, generally speaking, is acting well. We've been saying it's a big range trade, and if it does manage to sustain itself above 25, which it did not do, on an overt level yesterday, it would push up at least back to 2050. Interim support resistance at 2060, or the bigger supports up into 2070, 2078, and the previous high up here at 2088.70, going back to the current high trade. What's benefiting the bulls right now is, as we suspected when we discussed all this on Tuesday morning, is if the market was going to stay up this week, generally speaking, there was a good chance that the hourly MACD was going to head back out above the upper runaway band. It is. This encourages further strength. And that is pretty much it for the short-term view of the S&P 500.